Data just came out and it will shock you. Inflation is not going away, yet everybody is screaming for interest rate cuts. Now, you have to ask yourself, what does this mean for the future of the Fed? And what does this mean for the future of the overall economic health of the United States? And why are we seeing jobs just fall off a cliff? There is so much to go over today. But first, let's start with the breaking news that came out this morning. CPI month over month higher than expectations. The core meeting the expectations year over year, hitting that 2.9, and core still above the 3%. Now, with all of this, we've had the U.S. Treasury fall below 4% for the first time in the 10-year. But the reason that all of this has come down and it's falling is, well, consumer prices rise more than expected in August from services, not from tariffs. So is Donnie T right when he was saying, hey, you know what? Inflation is over with. We don't need to be dealing with any of this stuff. We need to cut interest rates. It's not because of tariffs. Everybody has always been saying, hey, you know what? It's tariffs this, tariffs that, trade war, trade war, trade war. Reality is, might not necessarily be the case. And this is from Zero Hedge, which I always appreciate their breakdown here, but it's a cooler than expected PPI that we had yesterday. And the headline CPI rose 0.14 or 0.4%. And hotter than the 0.3% expected, lifting the prices at 2.9% year over year. Now, this rose 0.4% in August, and the index for shelter rose 0.4% and was the largest factor in all the items in the monthly increase. So the food index increased 0.5% as the food at home index rose 0.6%, and the food away from home went 3%. And all items less than 3 or less than food and energy rose that 0.3%. And all items index rose 2.9. So it's interesting when you break this all down because, when you look at how the market is reacting to all of this, well, traders are now betting on 4 straight rate cuts through January. So everybody's saying, hey, you know what? We think that rate cuts are coming, and they are coming in hot here, folks. And it's not slowing down. So it's a very interesting perspective where we have inflation sticky, but jobs loss are coming at an all-time rate. So we need to cut interest rates as we see, this other headline here from Zero Hedge that Texas sparks an unexpected surge in job loss claims, the highest in 4 years. So we need these rate cuts in order to help the jobs market, but inflation is not going away. So after 4 years of showing no signs in life, the initial jobs claims surged higher last week with 260,000, 63,000, excuse me. And we are continuing to see this go back and forth, back and forth. So I think that, watching how this takes over, well, we're going to see some uniqueness come through with all of this, right? We're going to see some of this really look at, hey, what is going on here in the overall market? Even though CPI is coming in hot, but it's not because of tariffs. There's a tough explanation here. What will the Fed do in order to help inflation and then, avoid the potential of this coming to roost, so to speak? Well, when you look at the facts, when you look at everything breaking down, you see the amount of the CPI and inflation print not being where the tariffs are, and then, in line with expectations. But the reality is that the federal government employment is plummeting. Federal jobs just keep going away, and this is actually hurting the economy pretty good comparatively, right? When you look at the overall numbers, this marks the biggest 8th-month drop since the 1950s. Okay, I get it. The Doge came in. This was their entire job with the Doge, was trimming off the fat of federal jobs. But at a certain point, if these guys can't find other jobs, what does that benefit? Right? So it seems like it's going to be a little let's call it unique here to see the way that this transpires. But by comparison, the 1990s, the biggest drawdown was around 80,000 jobs. Meanwhile, total government employment is just falling down, state and local, 50,000. So the public sector continues to cut all these jobs at a rapid pace. And so this sets up for the September cut to essentially be a quote unquote done deal. And there's going to be at least one more to follow by the year end. And now, if you look at, hey, in 6 days, are we going to see rate cuts and how big? Well, it's risen up to 11.2% of a potential for, let's call it, 2 rate cuts. Now, am I saying that this is going to happen or it should happen? No, I don't necessarily think so. But what I do think is that this 11.2% speaks a little bit, right? I mean, we saw it at maybe as high as 15%. So still a very low possibility that we're going to cut 50 basis points. But the fact of the matter that they're talking about it should be alarming with all of this, because I think watching the inflation rise, and make sure you guys are hitting that subscribe button for me. We've got a lot to cover this week and a lot to go over, especially in these next 6 days. But watching these rate cuts happen is not exactly a positive. And I think everybody thinks that, hey, you know what? It's going to be a positive because we see, the market do very well. But if you look at the numbers here, the overall stock market not doing the best, right? So we see this continue and increase and increase and increase. So when you're looking at that, right? I mean, it's going to definitely happen and continue to rise up. Now, this is going to continue to increase. Excuse me here, folks. I'm sorry. A lot of craziness is going on in this world. I'm a little, let's call it a little distracted here today. But we're seeing the S&P 500 rise up at a dramatic pace. We're seeing it hit all-time highs. And as All Nighter Hider is saying, I personally, I would stay put as well, because I think even though we have all-time highs in the S&P 500, I mean, we're about to pass 6,600 potentially today, because everybody is so bullish on potentially having this rate cut. I don't think it's a positive by any means. I think that we should be very cautious when we see this. So, with this continuing to go up, well, it is a little sketchy, I guess we'll call it, with these rate cuts, even though, like, hey, these rate cuts potentially could help the private sector, but the reality is we're losing all the jobs in the public sector. It's not the private. I mean, the private sector and all that is hurting as well, but the public sector, I mean, look, the numbers are here, right? The numbers are showing we're losing jobs in the government, and that's the main issue of this job loss. But when we have these numbers come in and everybody's like, oh, you know what? We've just been floating around the 2.9% or everything. I mean, is it actually, if we just focus on it, is it really going to be the manifestation of lowering inflation? I don't necessarily think so. Because, I mean, the jobs data that we're seeing under the hood, Texas massively dominated the job loss surge. I mean, look at this. Look at how much Texas just crushed everybody else. That is massive. Look, I know you guys can't see the numbers on there, but you could just see the differences in the size of the bars. I mean, huge job loss. And the spike is, but there's not a lot of details in there. Like, why are you seeing the massive amounts of job loss in Texas? And like, look, by nature, like, how big is Texas GDP in America compared to all states? I mean, it's the second largest state behind California, and at least in 2024, and it has $2.7 trillion worth of GDP last year. Now, if you look at that based on countries, I believe that puts it in like the top 5. So, yeah, GDPs by country here. We have it at 2.7 trillion. Excuse me. Maybe not. It'll put it at the 7th. It'll be bigger than Italy. So, a country, quote unquote, bigger than Italy is now losing jobs. I mean, look at that spike. It's massive here, folks. But yet, hey, even though the Dixie is doing bad, the S&P 500 is not doing too shabby. So, everything should be all peaches and daisies, right? Let's cut interest rates. I actually don't think that we should be doing that. I think we should stay put. And inflation's coming in, and these CPI numbers that we're seeing are not too shabby, but hey, we'll see the 10-year US Treasury yield spike around, and there's something that we got to keep a very close eye on. So be sure you guys are smoking that like and hitting that subscribe button for me. I'm going to keep this one short. Got a lot of craziness going on in the world, folks, and I just hope you guys continue to, allow for this free discussion. I appreciate you guys allowing me to come and spew out some hot air in this microphone, and you guys continuing to come and listen to me. All I hope is like you guys, really just try to listen, and even if you disagree with people, just try to hear them out and not result into anything too drastic. So I hope you guys all have a great rest of your week, and thanks for bearing with me on this one, and I'll catch you guys all tomorrow.